Hi, I'm Colin McClelland, Editor-in-Chief of the Northern Miner. I'm at the International Metals Summit in London, and I'm with Chris Frostad. He's President and CEO of Purepoint Uranium. Chris, you've got a whack of properties up in the north of Saskatchewan there, but you've got an interesting kind of financing model there. Can you tell us about it?
Sure. We are, as you mentioned, we are in northern Saskatchewan, where all of Canada's uranium comes from.
Right.
And we've been up there for quite some time now, but what we're finding, what the industry is finding lately, particularly on the exploration side, is there's been a real challenge accessing capital these days. It's very expensive to work up there. Obviously, the world needs uranium more than we've got. And there's a desperate need right now to identify and develop more uranium, and Saskatchewan is certainly the place to do that. But again, the challenge on the exploration side is really accessing capital, and we've been seeing a lot of our peers and ourselves to a certain degree as we're raising a lot of money because we're causing a fair amount of dilution, and we are seeing that the upward price of uranium doesn't seem to be giving us the buoyancy to counteract that.
Right.
So it has been a challenge for us to find non-dilutive sources of capital to do what we need to do. It costs tens of millions of dollars just to make a discovery, let alone to define a resource. So what we've been working on for some time now, and I think we're in a good spot now, we have about 250,000 hectares of property in northern Saskatchewan covering a dozen or so projects right across the basin. Most of those now, though, are operated under a joint venture with a partner. And if our model is different, it's because of the nature of those projects and the nature of our partners that's making it different. First of all, we have these joint ventures cover our best projects, not our non-core stuff that we're looking to vend out. They're the most prospective projects that we have spent millions of dollars on getting to the point where they are now. The second most important aspect of this is that we are partnered with major leaders in the uranium space with far greater balance sheets than our own. So we are not partnering up, with other companies that may be having the same struggles as we might on the financing side, but this is Cameco, it's Orano, Orano Mining, and most recently IsoEnergy, who is sitting on right now the largest high-grade deposit in the world at about 45%. So these are solid players with that we can expect to see consistent financing from. Furthermore, these projects are validated by the fact that they are financing them, right?
Yeah.
These are companies that cannot expend exploration dollars on things that they don't see as being highly prospective. So that helps me tell my story, validate these projects. It's not just me blowing hot air. And the bigger aspect of this is that we operate all of these projects.
Right.
So we are the exploration arm for these companies on all of these projects, and that affords us management fees adequate to actually cover our overheads on an annual basis. So, mathematically, we're looking at probably in 2025 we'll spend about $10 million in the field.
Okay.
But we only need to come up with about $3 million of that on our own. So it's I think a model that's going to give us a lot of legs and a lot of runway, the runway that you need to find and define these projects.
Can you take us through a couple of those projects? Maybe start with Hope Lake and what's being planned there, and what it.
Hope Lake is our probably oldest joint venture. That's Cameco and Orano. We own 21% of that.
Yeah.
It sits on the western side of the province, but is adjacent to and on trend with NextGen's Arrow deposit, which is about 250 million pounds, and Fission's Triple R deposit. It's about 100 to 150 million pounds there. So it trends right up onto our project. Last winter we identified we're into a new area that we've been working. We were just starting to come into a new zone of mineralization that we're going to be following up on this year. It's a high priority. But what our partners certainly see as an even higher priority is further on the eastern side of that property. NextGen has identified a new what looks to be a deposit. Quite a significant one, and again, it's just on the other side of our claim line. It trends right up into our property, and it's on targets that we have yet to put a drill into. So Cameco and Orano certainly are seeing that as a priority in the coming year to get our drills up there and start testing that.
Right. Do you want to touch on Smart Lake?
Smart Lake is one that we, it's another joint venture. We have a Cameco in that one. We own 27%. They own the remainder. It is just to the further east from Hook Lake, but it's a project that we haven't drilled since 2008. That was our first drill program. We hit mineralization right out of the gate, but things started to light up over on Hook Lake, so we took all our money and drills and moved over there for a while. So now for the first time since then, we have a drill program starting up in January, and we'll be testing a number of targets that we have on that area as well.
So with this financing model and maybe a more positive outlook on nuclear energy, across the board, governments are returning to it, perhaps some, and some were maybe always there, but it's more pronounced anyways, the sort of green savior of the planets. What's the outlook?
Well, certainly the outlook has changed a lot in the last 10, 15 years. I mean, nuclear is, as you pointed out, the new savior. But because of the supply gap we're seeing, the fact that reactors are planned out far in excess of the uranium we have to fuel them,
right.
That's the issue. And because of a lot of the east-west division now in terms of access to uranium caused by Russia, Kazakhstan, everything's going in that direction. The United States is going to have to, and the EU is going to have to rely more heavily on Canada and Australia for its fuel. So we're seeing a lot more support and pressure from the majors to invest in exploration, and we're also seeing, because that supply gap is growing, we're certainly expecting over the next 6, 8 to 12 months to see the price of uranium really starting to get squeezed upwards.
That's fantastic. Chris Frostad, who is the CEO and president of Purepoint Uranium, has joined me at the London International Metals Symposium. I'm Colin McClelland with the Northern Miner. Thanks for watching.